Welcome back to the channel. I hope you're having a fantastic day wherever you are around this gorgeous planet of ours. We're indoors again today. Yesterday we had some beautiful sunshine on the beach, but today a little rainy outside. However, what is looking fantastic is the low that has come in on the stock markets. We're going to follow that today. Of course, Bitcoin, Ethereum, and cryptocurrencies. Going to get through those because we did talk about a crypto capitulation. So what to look out for in case those cryptos are not going to capitulate further. However, I think some of them will definitely continue to capitulate. But let's get back to the main focus here. It's the CPI data that came out. We talked about it in yesterday's video here on the channel. So make sure you are subscribed with the bell notification icon. We're in October. We put this out in advance, October predictions, and at the beginning of the year, looking at the 4-year cycle, looking at the roadmaps ahead for the traditional stock markets. Talking with Phil all year, the best economist in the world. I need to remain slightly humble because we haven't confirmed a major low just yet. However, specifically looking at a lot of the Gann cycles, which you almost will not see anywhere else on the internet. The biggest media outlets will not be talking about this stuff. So make sure you are subscribed to this channel and to Michael's. Basically, we've been waiting for a low to come in later in the year, which is what we said in around December, January, February. Now, I was looking at a low, possibly Q2, but I was looking more so for Q3, Q4. And of course, we're going to have to split these up between the stock market and Bitcoin. So there's going to be slightly some variances here. However, so far, I do my best to remain humble here because it hasn't been 100% confirmed yet, and that won't happen for another several weeks or even months. But we had the low for Bitcoin in June. We had a very significant low for the stock markets in June. Now for Bitcoin, we're a little higher with this current low that's come in. We're still just above the bear market downtrend, and it's really nice to see it bounce off that bear market downtrend line so accurately for now. So very, very accurately that's, it's been following that for this entire period of time. You still have the June low as the major low for Bitcoin, and we now have the October low as the higher low. Now, yes, it is just a few bucks around this level, 152. So that's 21st of September, a nice seasonal date. And then the 13th of October is 160, so 18,160. And if you weren't following, 18,152. So just a few dollars difference there, but we do have that reversal after the CPI data has come in and it's slightly higher than the forecast. But overall, since June, which the announcement was in July, the CPI data has been coming down. So the CPI actually has been coming down, 9.1, 8.5, 8.3, 8.2. The core data is up, so the core inflation is actually up and it was slightly above the forecast. However, generally that is seen as bad news, right? So this is what we very much focus on. Normally this is seen as bad news, higher inflation data. However, what do the markets just do? They bounced and went up massively. And when I say massively, I mean this is the second largest day of the year. 193.83 points on the S&P. The last time it did this was 194.73. So dead on 0.9 of a point on the S&P. And that last day was January 24th. So that was the Monday. And that stopped the market and we got a reversal. And basically the market didn't go much further down through February and March before it took off to that March high when everyone was thinking we might go back up to all-time highs. We had some pretty good days up at that point as well. But alas, we've now fallen past that point. But basically, these are the biggest days that we've seen this year. Call it 194 points. The market didn't even bounce this hard out of the COVID low. And of course, the prices were a lot lower then. The low was 2,200. So to get a 100 or 200 point move is going to be a 10% day. So you've got to take that in consideration. We had a 7% day. Basically, from the top or the close was 9.49, so 212 points. But we go from the top of that low bar, 159 points. So that was pretty much the biggest range. But in terms of the day itself, it was 105 points, 4.49. So basically, the bounce out of the pandemic low was about 100 points for the day. And from the previous close, was about that 200 points that we just looked at. So we're now at one of the biggest days in the last 2.5 years for a bounce. The previous times this has happened, yes, we did go on a significant bounce here in January, February into the top in March. It wasn't the end of this bearish period, but it is it's lining up very well right now. It's around one of our seasonal dates. It's around the 50% level. Look at that. It hit dead on the 50%, 3,500 points. Remember, these are the macro cycles, so they take time to play out and time to reach. Pay attention to the date of the 13th of October low. The next level to the upside, now that we are looking at this as being a potential low, significant low, at least for this period, is around that 3,800 points. And we've got to fill that price gap that was put in as the market started to fall away from that previous top. So we had that price gap from about 3,700 points to about 3,720. So pay attention to that as well. And obviously this down range for the market to get above. So we should see some sort of resistance. You know, this was the second biggest day for 2022 and one of the biggest days in the entire history of the S&P. As for the macro picture, obviously the week is not over yet, but we do have a good little pattern forming here for the weekly as well. We've got another day's activity to go, so Friday, but this is starting to line up like a dragonfly doji. If you're not familiar with that, that's this pattern here. And if it's on a macro time frame, that's another very, very good reversal sign. So dragonfly doji, low price, high price, and you've got the open and close towards the top of the bar. And that's what's happening right now. Macro again. And the beauty about this is, especially if you're trading, this is what you want to see on short-term, long-term timeframes, whatever it is. You want to see it off significant price and time levels. And we're getting those things come together right now. Like I said, we're not out of it just yet, but these are the signals that you want to see early on to give you that first sign that we're recovering. And remember, we did look at this range, this move up previously, and I said, even if the market goes slightly lower than here, I believe we are bouncing around this low. We're forming that low, and that low can take many months. So this range that we were watching is 688 points. That's what we're going to look for now from this particular low, should this be the low. We want to look for around that 688 or more points to give us that overbalance in price to the upside. All right, so that's going to take weeks, if not months, to play out over this period. We'll probably get it in a matter of weeks, but then the duration of the low could take many months. The Nasdaq looks very similar as well. We've got that big reversal bar here. Drop down to the support level of 10,600. Yes, it went a little lower on the open, so 10,480. The low was 10,440. We've got a nice big close up here at around 11,000 points. The price gap is a little further up at 11,300. Next resistance around 11,800. So this is also bouncing off significant price support levels. 10,006. Remember, we talked about this for many months, going all the way back to June. And this also lines up pretty well with those September 2020 lows. So that's always a nice thing to see when you got these patterns forming in the market around the price, around the time. You've got a good reversal bar pattern or candles if you choose to use candles. These are all great signals for a low to come in. And of course, this is going to sound crazy, especially when everything else is going down and the economy, this, that, the winter coming in for Europe, people can't afford yada, yada, yada. I get it. I understand, but I'm in the business of reading the charts, not of letting my emotions get swept up with the latest news headline about how people are living around the world. That we can save for another time. We're here to read the charts and make money from that. We need to leave those emotions elsewhere for different discussions. Quick look at the US dollar as well, as we dumped after that extreme news from the top. Again, covered this late September. Got the low come in close to the 50%. This was that low to the capitulation, the collapse. A weak bounce so far. But I do want to see this close underneath these levels, underneath 112 points for a more weaker signal at the moment. But so far, this is in a bit of an uncertain territory, a little weaker as we're just getting a lower high put in. So it's not there yet as a confirmation to further downside, but it still has not got to that top level that I guess everyone was expecting. But like we've talked about, we're expecting this to go across a longer period of time to form a top around the US dollar as well. Now on to cryptocurrencies in more detail. after that drop on the S&P and the Nasdaq with those levels. You know, I'm getting very excited about that because it's coming in pretty much on point. Let's stay humble. Jason, let's stay humble. All right, Bitcoin, the low here at around 18,160. We got a pretty decent bounce. Remember, the level that we need to overcome here now is at about 20,700. That's been one of those key levels that I've been watching here for a long time. You guys are probably getting sick of hearing about the 20,700. There you go. There's the bottoms, and the market has been rejected in the past. So that's been a key level. And then a little closer to the market action is 19,550. Call it 19,600 or 19 and a half, around that level, because you can see back in August and September, it held up, it dumped, it pumped, it found support, it dumped. So it's a key level that the market has been oscillating around. To the upside, yes, we got some support on the bear market downtrend, so the macro bear market downtrend. So probably in the short term, we should see this at least come up and test this a little closer to 19.6. You want to see that 20,500 get taken out, and my preferred level is 20,700. So if we take our 50% tool, you can see 2472. So for a round number to the upside, 20,500 and 20,700. And then my Wyckoff levels are still in play here. I want to see these levels broken to give me some more reassurance that we're going to see a longer term move for BTC. And that's at $23,200 based on this particular bar alone, 19th of August, as it was a key level for the market to dump from. After support, big range, lots of volume, basically saying that the trend had gotten weak, and that's where we were looking at mostly shorts from that period. So overall for Bitcoin, it's still within an accumulation period. You know, we've looked at the Wyckoff schematic going back to the selling climax on the 18th of June. We had the automatic rally. We've had the secondary tests. We've been bouncing around within this zone now for coming up to 4 months. And like we talked about, it could take many months from here. But in terms of a buy zone, you should know that already. We're looking at levels underneath 19,600, as it's been a key level for previous cycles to accumulate BTC before the beginning of the next cycle. Now, I should mention that at TIA Crypto, this is our trading education, we are in the process of getting an exclusive proprietary trading strategy released for everyone. Now, you're going to need to be subscribed with the links in the video description for Bitget. This is for anyone across the world, US, everything like that, or ByBit. So if you're not on these particular links used in the video description, you won't get access to this. So if you're one of our members already in our education, make sure you're on these particular links. And if you subscribe with someone else's link, make a new account, use those links down below. We're going to be releasing this proprietary trading strategy and creating a group just for this. Now, this is probably the first time that I've mentioned it here on the channel. Michael and I are still working on it, so don't fret. Yes, you will have questions, but just in the short term, make sure you are subscribed with these particular links. Set up an account. You can earn up to $8,500 here for Bitget using that link, and then for ByBit as well, about $4,400 of sign-up bonuses. 0% on spot trading fees. There's no KYC, so you can use this anywhere around the world. Protect your privacy, transfer without banks, and just protect your privacy basically using these particular links. But you will have to be subscribed. So if you are using other links, go and set up new accounts using those links in this video description. Now for ETH, and ETH also had a slight capitulation to the downside, $1,190. For now, it's still holding above the 1,280, so $1,280, which were the previous tops going back to June. So that's a reasonably good sign, even though there has been a fair bit of weakness to the downside for Ethereum. If it can hold up above this level and close above there for the week, at least that puts another leg in for the bullish case. Now, overall, yes, the trend is still down. You got lower highs, lower lows forming. It is really trying to hold this level in amongst all of the other news and everything else going on. So for me, there's not enough confirmation for the longer term buying signals just yet. For the short term, maybe we'll get a little bit of upside here. And if it was to see some upside, should the 1190 be the bottom, then we'll be looking towards 1490, call it around $1,500, which is dead on halfway between the current weekly swing. The reversal target here for the Wyckoff flip is still at 1850, so 1,850. That's the bar that we were looking at back in August. Low danger, high danger. We continue to close under that 1,300 is really just starting to put a lot of weakness into the structure to go back down and test 1,000. And of course, if 1,000 breaks, I think we've probably got somewhere between 680 and where those lows are at 1,000. So somewhere in a $300 range for ETH to come to some sort of resting point and test again. As for ETH BTC, we still have a fair bit of time for this particular cycle from the top. ETH tends to do these sort of 13 weeks. We're on a weekly chart here. So for the macro picture, you can see top to bottom, bottom to top, top to bottom, 13, 10, 12. It's around this period of just on 3 months or just slightly short of 3 months. If I take it to the low, you can see we've got about a 14. So it's basically just looking at cycles from peaks to troughs or troughs to troughs as well. And so this peak is now about 5 weeks into the cycle. So it's probably got another 5 to 8 weeks to go before we can see some sort of landing point for ETH BTC, which is why I'm still not interested in buying Ethereum for my longer term portfolio. Regardless of the price, I want to wait for the time because the time is the most important. Now for the capitulation on the cryptocurrencies, ADA has been like watching paint dry, as I've been talking about on Twitter, which you can follow down below. Twitter and Instagram links are down there. I'm also doing shorts out there as well. So yeah, check those out. Make sure you're following those official links so you don't get scammed by all those other scammer profiles out there. The final capitulation zone, we've looked at this between 17 and 33 cents for ADA, and currently the low is at 35 cents. If it can't hold that 38, we're currently at 37.8 cents. Yes, it's going to probably trend around between this zone of 26 and 38. You can see there's a fair bit of traffic when we look left on the chart in previous history before the market ran up. But overall, I think this still has a fair bit more time to go. Even if we see some bounces from here, yes, it'll bring FOMO into the market and people say you're an idiot, you missed out on ADA, blah, blah, blah. It's the same thing that happened time and time again. It's happened on Solana. I've seen it so many times. You're a fool for missing out. This time's different. The fundamentals of the project have changed. We have the hard forks. You name it. There is something to be said about why it should go up. We're focused on the chart and what the investors are actually doing, what traders are doing, what people are doing with their money, not what the project is talking about on Twitter or timelines or those sort of things. So the main thing is it needs, for the bulls, it has to, from this capitulation, if it is the capitulation, get back above approximately that 38 to 40 cent level quite quickly. Otherwise, we're in for some more grindy time and probably lower prices over the coming months. Same deal goes for Solana. However, it is slightly stronger because it didn't break the June low, whereas ADA broke all of its previous lows. It broke the July low, the June low, and it had an earlier low here in May. So Solana, it's got a bit of a hammer here. The doji pattern that we're looking at on the S&P, we've got that here on the weekly chart on the macro, whereas Solana's on the daily. If it closes below this level of about $29.80, $29.90, so $29, that's going to be a little bit more trouble and probably head towards that previous low between $25 and $26. So that's what you want to look out for the end of day close here, and then also the end of the week for Solana. Otherwise, this is probably leaning to more towards the rest of those cryptos capitulating, something that I've talked about for a while here. Same deal goes for all of the cryptos. If Bitcoin starts to get a bit of a run on, their dollar values will go up, but their BTC values will probably drop, which is why I'd rather stay safe and buy my BTC, reduce my risk out there, because I think eventually these will go down over time. FTM, classic example. Just before I do, Solana was another classic example where I looked at selling out as it broke down. People said, you're foolish, you should have got in here between $80 and as it ran up again. History shows not a good time. The timing was not there yet. This was not the time to be buying. And you could clearly see it that we had such a long run up. This was not ready to capitulate. It just wasn't ready to buy because it was trying to go on another last leg. Very, very weak. And it then dumped yet again. Same deal for FTM. Huge talks up in March. More big talks in June and July. And this thing has just tested new lows. The close is still up there for the end of the week. Not there just yet, but it is looking rather weak. However, top to the current low, 94.6% down from the high. Not a bad area for altcoins if you believe in them long term and you want to start doing your DCA thing. I think there's still a fair bit more time to go for most alts. And so if this was to drop a little bit further, it could go anywhere underneath that 10 cents, currently at 20 cents, which means it would be another 50% down from the current price. And that would put it at a 97% drop from the top. So it's currently at a 94.5. It could go 97.5. So it's only 3% extra from the top. However, it's a 50% move from the current price. Keep that in mind if you're looking to DCA on any cryptocurrencies. Not that much of a difference from the top, but from the current price, it's going to be a big move. So although the fear's out in the market, everything is looking like it's working out to plan for now. I will remain humble and focused on my plan. That's my promise to myself and to you guys as well. Don't forget to use the links for Bitget. This is for everyone globally, and of course ByBit as well. Up to $12,000 of sign-up bonuses if you use both of those links. We do have that proprietary trading strategy coming out exclusively for members that use this link, members and subscribers, you guys watching that use these particular links. So if you're with someone else's link, go down and use this link, create a new account, and we'll be releasing that in the coming weeks. And of course, subscribe. There's videos popping up on the side here looking at trading strategies, long-term, short-term macro stuff, and of course, the more macro looks of the economy with discussions with Phil, my October predictions. You can go back and check out all of the previous videos to see how we got here. All right, guys, thanks once again. Like up the video. Let YouTube know you want to see more of this content. Subscribe, bell notification icon if you haven't already. Until next time, peace out.